Hello and welcome to Crypto Chat. In today's video, we are going to talk about the financial crash of 2008 and how it created the perfect context for the birth of Bitcoin. Get ready to dive into the world of cryptocurrency and learn about the events that shaped the industry we know today. The roots of the crash can be traced back to the early 2000s, when the US housing market was experiencing a boom. Many people were taking out mortgages to buy homes, and banks and other institutions were eager to lend money. To increase the pool of potential borrowers, banks began offering subprime mortgages, which were given to people with poor credit histories or low income. As housing prices continued to rise, many people took out risky mortgages and refinanced their homes, taking on even more debt. Meanwhile, financial institutions packaged and sold these mortgages as securities, which were then sold to investors around the world. However, the housing market eventually began to cool off, and people started defaulting on their mortgages. This led to a decline in the value of the securities that were backed by these mortgages, and many banks and other institutions found themselves with large losses on their books. The crisis reached a tipping point in September 2008, when Lehman Brothers, a major investment bank, filed for bankruptcy. This event sent shockwaves through the financial system and triggered a global credit crisis. Many others were also in trouble, and the US government had to step in with a series of bailouts and interventions to stabilize the markets. The crash of 2008 had far-reaching consequences, including a global recession, high levels of unemployment, and a decline in the value of stocks and other assets. It also led to increased regulation of the industry and changes in the way that financial products are created and traded. In the aftermath of the crash, many people lost faith in traditional systems and began looking for alternative ways to store and transfer value. This is where Bitcoin comes in. Bitcoin is a decentralized digital currency that was created in 2009. Just a year after the financial crash. It allows users to make transactions without the need for intermediaries, such as banks or credit card companies. Transactions are recorded on a decentralized ledger called the blockchain, which provides transparency and security. Since its creation, Bitcoin has gained a significant following and has become a popular alternative to traditional fiat currencies. Its value has fluctuated over the years, but it has generally trended upwards, with some drastic spikes and dips. Many people see Bitcoin as a way to take control of their own affairs and to avoid the risks associated with traditional systems. Others see it as a speculative investment opportunity. While Bitcoin has gained a significant following, it is still a relatively new and untested technology. Some experts predict that it could become a major player in the world of finance, while others are more skeptical. Regardless of its ultimate fate, Bitcoin and other cryptocurrencies have emerged as a response to the crash of 2008 and the mistrust it generated in traditional systems. It remains to be seen how they will shape the future of finance. There are several reasons why cryptocurrencies can be an excellent alternative to manage personal finances. First, cryptocurrencies offer great freedom and control. Transactions are recorded on a decentralized ledger called the blockchain, to ensure transparency and security. Users can send and receive Bitcoin or any other cryptocurrency without having to go through a bank or other intermediaries, giving them greater control over their own affairs. Second, Bitcoin can offer increased security. Traditional financial systems are vulnerable to fraud and hacking, as was demonstrated by the crash of 2008. Bitcoin, on the other hand, uses advanced encryption technology to secure transactions and protect against unauthorized access. Third, Bitcoin can offer greater financial inclusion. In many parts of the world, access to financial services is limited, either due to a lack of infrastructure or because of regulatory barriers. Cryptocurrencies can offer people in these areas a way to participate in the global system and access financial services that would otherwise be inaccessible to them. Finally, Bitcoin can offer a hedge against inflation. Many fiat currencies are subject to inflation, which can erode the value of people's savings over time. Bitcoin, on the other hand, has a limited supply, which makes it resistant to inflation and allows it to potentially hold its value over the long term.